Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's update our view on the gold market. As usual, we have prepared weekly report. There we have considered a few topics. Seems interesting right now. Although this week we haven't got any significant events, so even the Fed meeting has brought not really bright results. So just two major additional moments have been mentioned by the Powell. First is recognition of the total uncertainty on the perspective, and second, that actually they thought about the changing of the quantitative tightening pace. So this, I suppose, were two major points in his statement. At the same time, we see that silently it is happening some revision of inflation expectations. Now even the government representatives, Fed representatives, start speaking about sticky inflation, and even in the big media such as Bloomberg, we see some articles, materials concerning this topic. We suggest that this is some kind of the accepting of the reality, I would call it in this way, just because market was too inspired by the expectations of the dovish policy in the winter of 2023, but then it was really big punishment for this, as the rate has jumped for 0.5% and actually rally has fizzled on the bond market. Now it is a second attempt to expect dovish policy from the Fed starting in June, but inflation indicator shows that it might be not the case. And Ralph Bostic said that he actually expects only one rate change in 2024. This is the first moment. Second, we have taken a look in the report also on a few other things, is a overall wide view on the gold performance and some political issues, but just briefly. We're not really interested with the big details about it. The one thing that we could say is that it seems that ongoing processes as in the economy, as in the politics, geopolitics, now is sharply accelerating. So it means that we're coming at some important point in the progress of these events. And this brings some really big changes for markets, and gold market in particular. We treat this situation as a positive for the gold. Maybe it sounds a bit cynic, but this is how reality stands. So if you would like to know the details, as usual, you could read the report. I think you should find it interesting. Speaking about the short-term situation, here we're dealing with a retracement, and this is not surprising that from time to time gold will become the object for impact of the bearish factors. Right now, as I said, this is changing of the sentiment concerning the interest rates and the value of the United States dollar. And although gold has really great bullish background in the long term, in short term, it's no insurance that it can't show some short-term pullbacks and retracements, and one of them we have right now. In the longer term view, any drop right now we consider as a deep to buy. So for investment, for wealth preservation, for long-term purposes. Still, for trading in the short term, it's also not forbidden to consider taking the short positions as well. So currently in the next week, we're dealing with the two major patterns. First one is already stands in place, which is bearish grabber. And by this pattern, we see the market should reach the 21.45 lows, so at least this level. Once this will happen, market should form second close below the 3x3, and potentially we should get also double repo sell pattern initially. Later, we also will be watching for possible failure of this pattern, because it's not, I mean, not that it should happen, but as you know, the double ripple failure is also directional pattern. That's why we also, every time we're keeping an eye on the failure of this pattern as well. But if it starts working, we should get deep retracement. Potentially, it might be around 21 even, 50% support in the whole thrusting action. But on the next week, probably it will be somewhere to the 21.20, 21.30, because we have the oversold and fib level on the daily chart. That's, generally speaking, on the trading plan on the next week. So now on the flow time frame chart, we already talked about this, that double ripple could take the shape of the head and shoulders. So first, once market will reach the neckline, it will be second close below 3x3. Then the minor pullback could form the right arm, and then we could get the downward continuation. So this is the pattern that you theoretically could use for position taking once it will be formed. On the hourly chart, our short-term idea has been realized. So you could see that once market hits the XOP that we mentioned, we've got the upward bounce. In general, here's the two moments to mention. First of all, there should not be really deep retracement, just because we're on the slope of the head, and here any deep retracement is a negative moment for a bearish pattern. If we get retracement, it should be relatively small and fast. And actually, you can see market already has shown the bounce from the XOP to the levels that we talked about, from around 21. Here's was the fib level from this reaction point. Now I don't have it, but you probably remember it was around 21.69. But next week, let's see, because rally here was relatively strong, maybe market will be able to form compounding retracement in the two legs, because gold market is feature of the gold market showing compounding retracements. It very often happens. So that's why I also keep this scenario possible. If we will get it, just keep an eye on the possible 21.85 area. Here we could get A, B, C, D retracement, and potentially it might be garbage cheaper to sell. It's also the pattern that we need to keep an eye on. Obviously, we're not considering right now any long position. I mean, for trading purposes, as bearish context on the daily chart. So we're now watching just for the bearish positions, but this is only for trading. For the investment, as I said, any downside action might be considered as potential to the taking the long position for a long-term perspective. So that's what we have on the gold. Next week is promised to be interesting. We will get the personal consumptions. So it's also could make impact, especially if it rises as expected. Now market expects 4 decimal points. It's slightly greater than last month. So if it rises more, then probably downside action might accelerate here as well. And we have clear patterns that is a pleasure to deal with. So let's just keep watching and see.